Hey folks, just doing a sound check. Can you let me know both on Zoom and YouTube that you're hearing me all right?
Bob is wrong. We can hear you on Zoom.
Awesome. I'll start sharing the screen in a minute. Just open up a few things. Awesome. Thanks, Eric. Yeah, YouTube, Gino, I agree. I told you this is what these guys are going to do. Folks on Zoom, let me know you're seeing the screen now.
Yeah, it's good to go. I can see it.
Awesome. Okay, YouTube folks, you should be able to see the screen now. Just want to make sure you're seeing everything. So we'll get started here in just a few minutes, folks. I normally don't cover markets, but after a day like today, we'll talk markets for maybe about 10 minutes or so, just to cover a couple of things that are going on. And I'll get started here in just a couple of minutes. Got to go get some jet fuel, get some Runa, and we'll be going here in just a few minutes. The chart that I've got up on the screen right now is an hourly E-mini chart, and you can see that massive reversal. Yeah, we still get a lot of folks joining on the Zoom meeting. So if you join the YouTube session, we do have folks, this is a training session, but we will be going through some things that we went through last week as far as the market grid, setting up trades. There's plenty of things to talk about, especially after a day like today, and how useful this stuff it actually really can be. So just give me a minute. I'll be back. We'll crank up the meeting and look forward to working with you folks today. Okay, folks, welcome everyone. Yeah, no sound because I wasn't there, Paul. So everything should be back. So we're getting ready to start the show here. As I mentioned, I think we'll spend a few minutes just talking about what happened today. And this is not an effort on my part to say, I told you so, but this pattern was very obvious to me that we were going to move up into this Fibonacci retracement range and get a reversal. And just so just so we talk about a few important things. If you didn't watch the last two nights videos, probably the night before last, where I laid out all of the parameters and where this market was supposed to go, and I've also had the dialogue that there's no way that these folks are going to be having anything to do with a deal with Trump before the election. Okay, not going to happen. In fact, I saw an interesting story. So that just to create more noise, now the House is going to investigate Trump for CDC manipulation. Okay, so what else is new, right? So this is just the world we live in. Doesn't matter what, it's just crazy everywhere we go. And the but when it was announced that there's not going to be any negotiations till after the election, boom, we saw what happened. And everything was being built on a false narrative. And I was trying to mention that in the videos, that the configuration of the patterns, but more importantly, the backdrop. There were no fundamentals. There's nothing behind this rally. So it's going to be very subjective. And we're going to go through the WaveTech tool here in a minute. And I'll kind of tie together some analysis on looking at, so that you folks that are subscribing, especially the new folks that are coming on, and a lot of folks have come on because of the market grid. And I'll talk to you a little bit about what's going to happen with the market grid as well, as far as enhancements and things of that sort that we're working on. That thing is just so powerful, and I'm so glad we figured out how to get some of these numbers out. And I've got a meeting with another one of my IT guys that we may be finding a way to get this thing into our Portfolio Expert platform with every symbol in the database. So working on stuff, it may not seem that way on the outside world, but there's still a lot going on here that we're trying to continue to get process out to you folks. And I still find this whole community, everything that we're doing here is really exciting. So back to the markets, as far as this goes, we're looking at futures right now, down 145. We're seeing a little bit of selling after the close, but I'll obviously go through in tonight's video talking about the elements that are going. This is basically where we went. There was a little mini bounce there, was able to play on the futures here after the sell-off today. And but overall, this thing's doing exactly what it's supposed to do. And I'll just go through a daily chart real quick, and then we're going to dig into the WaveTech stuff, the reason why everyone's here. So we'll look at the daily here. It's a pretty interesting day. We had basically almost a perfect R2 hit. Let me bring that up on screen. And I can't even look at a white chart anymore after going to the dark view. This is just so much easier in the eyes. I'm sure you guys agree. I've seen a lot of folks out there commenting on it, and I spent a lot of time. Basically, I've got kind of a Bloomberg look, if you will. The colors, a lot of the colors that are in here, Bloomberg looking colors and stuff, but it just looks good, feels professional. So I thought that'd be a good way to approach how we present things. But if you look at the R2 was 34.22, the high 34.2175. That's a smack on hit. That's a one tick difference. We reversed from there, and the low S3 33.48, and we traded down to 42, almost hit an STX. Very seldom do we get those R2 STX or one of these this is a big expanded range. So a couple things that will happen, we'll just talk about market grid for a minute here as well, is the volatility over the past 3 days is going to remain fairly high, and that means that we're going to see an expanded view. I think we're likely to see the grid turn down a little bit tomorrow, and like I said, I'll come up with all the numbers right now, as far as where I think the markets are going to go. But right now, we're definitely in this range. I'll make sure I do a lot of effort. Been getting done a little late the last couple nights. I've had some other projects that are jamming up my days, so especially my evenings. It's just been a lot going on. So anyway, but that's all I want to say about the market. We'll do a full day tomorrow, going through markets real time, and with this volatility kicking up again, this will be tomorrow's live stream will probably be really good. So if you're here to talk about the markets, we're going to talk about trading the markets. We're going to talk about using the market grid. I'm going to bring up a number of elements out there, so we'll be able to go forward. So Jim, I see you got your mic off. Did you have a question?
Oh, sorry, I didn't realize I had it off.
No, that's okay. That's okay. I just seen it on, so that in case there was a question. All right. Well, no problem. Yeah, we still have some folks joining in, so this is typical for the first 15 minutes or so. So let's go ahead and let's start looking at a couple things here. Let me get this off screen. And one of the things I want to go to and talk about, and I know a lot of folks signed up for an account before, maybe were disappointed that the market grid wasn't in WaveTech. Now it's not in WaveTech, but it is on Portfolio Expert, but you have to have signed up for WaveTech to get to that. And folks are saying, can we unbundle it? It's just all together. This is just one service. You're going to get everything. You get the WaveTech, the grid, all this stuff. And I just want to talk about, as I bring up the grid right now. So I click on the panel up here and bring up the grid, and it, as I've said before, what we get as we go through the on the market grid, the way it's set up right now, it's just an HTML page, and you've got to scroll down to get the numbers. We're working on, probably in the next week or so, could be a couple days beyond that. One of the folks that I'm working with on this project is actually traveling internationally from where they are to the United States, so they'll be back here I think next week sometime. So, but what we're doing is we're going to have a search function. The next thing, we're going to up the numbers of symbols as well that are being tracked in the market grid. And then the next phase will be that we will get to the point where we're planning on more or less the grid lighting up, meaning that if an R1, R2 number gets hit, it's going to actually paint the block, so you'll be able to see it on the matrix. Now I talk about the market grid, that's for the day, the daily, the weekly, and monthly. As these numbers get hit, we just look at a greater than, less than number, and once it equal to or greater than or less than, and once we get to that level, then it's going to show you what's been hit. And the ultimate plan for this product is to have historical data where you'll be able to bring up charts and do some other really cool stuff. We're working on this project, and as I mentioned a minute ago, am talking about putting it on the Portfolio Expert platform as a functionality in the software. We're thinking it's going to be fairly simple to add that function in. And anyway, so there's a lot of things going on, product development. I just want those of you that are paying for it, I want you to know that your money's doing good things. It's actually helping to expand this product. And a lot of the money is going toward the product. We're not spending money at the moment advertising or doing anything. We're just organically growing this through the community we have on YouTube and folks that have signed up for email broadcast and things of that sort. So that's really what we're doing at the moment from that standpoint. So, but this grid is the way it's layered is you'll see that anything, the indexes usually have a qualifier. The cash index is like a dollar sign or an at sign. The futures and all of this have, those are all going to float up to the top. So we do cover futures, and I have no problem of adding pretty much anything you want. Ultimately, the plan is to add a substantial amount of things in. So we'll go over to TradeStation here for a minute. I just want folks that are signing up, so I want you to be able to see what's going on here. And what I'm going to do is open up, and this is more or less the functionality. I'm opening up in TradeStation. This is a radar screen process, and the reason why I'm showing you this, we can export everything to CSV over here and what have you, but this is actually tracking real time. And so if you see, this is really important, if you look at what it says to close, I'm going to change that. I want to change the close on the HTML to last, because if it's a symbol like ES or something that's trading virtually 24 hours a day, whenever I run this grid, it's going to grab that last price and it's going to say the close. So just the numbers are good when I post them. I put a date stamp right now, but soon all this stuff, you're going to watch some amazing things over the next 30 days as far as this product starts to evolve, and this will actually be a great suite to help you. And we've never had this before, and we have it right now because of the enthusiasm that you folks showed in following the channel and responding to the market grid yourself, and this has really inspired me. So what it's done though is given us another element if you're using WaveTech and the buy sell signals to actually go in and maybe enhance the exits and entries when you get those prices. And just go on for another minute here, is the reason why I developed the market grid. It was actually developed in 1996, and that was the original time where I developed it, but I developed it for my institutional bank account clients, because what they wanted, they were even buy side or sell side hedges. They even had to hedge their long exposure or short exposure, whatever they were doing. So we set up this grid to give them an optimum point which to buy or sell in any given day. So that was the point of the grid. As it's evolved over the years, it's become an incredible tool with targeting intraday prices, looking for things. In last night's video, I specifically said that you want to make sure to watch out between 34.15 and 34.42. Watch for a reversal pattern. And boy, did we get one today, right? And those are the kind of classic patterns. I knew this thing was setting up for a reversal. There was no way that, that it was just going to rally all-time new highs and everything was back to normal. It's not. There's a lot of challenges in the economy yet, and there's a lot of folks on the channel challenging me, where's the recovery at? Well, the old saying about the economy, right? And about recessions. If your neighbor's out of work, it's a recession. If you're out of work, it's a depression. So pretty much I suspect that whoever makes those comments probably are out of work, and it's a terrible thing. But the reality is that the unemployment rate's 7%, and that's not good, but it's not terrible either. I grew up back, I got out of high school in 1970, which is scary, which is 50 years ago. And there were some crazy things going on in 1970, 68 through 74, and maybe into 76. And I started actually in this business not until 79. I was in the real estate business. But the point of all this is that what we're seeing today, these numbers will actually help you to really hone in on those entries and exits. And that's a prime thing I want to cover today. And I also want to look at some of the symbols that signaled like in TradeStation here. And one last kind of announcement is on Thursday. I'm working with, I don't think he's on the line. Let me just check on something here. I can actually, okay, he's not online today, but I am working with somebody on Thursday to get the TWSs, the indicator suite, which will be all the PPMs, the price projection tools, cycles, all that stuff. We're putting a suite out on TradeStation that we're going to finally get it done. We've had some background stuff that we needed to fix. On Thursday, we're going to start finally getting that thing up on the App Store at TradeStation. So that will be the next announcement. So we're trying to get a lot of these processes out because of the, just because of what's going on here with markets volatility, and you folks have been exposed enough to see there's a lot of valid work going on here. This is stuff I've been doing for a very long time. So, all right, so, okay, I think I covered all of that kind of stuff. So let's start to dig into some more things here. I said I would tie this together with what is going on in the markets today, and also just kind of referencing last night's commentary as well, as we got a ton of buys. We got like 7,200 buy signals, but I talked about this last night. This 1.2 is more aggressive, and if you look at the optimization model, only 38% of the symbols that are out there are actually mapped out to this part of the database. So this was a more aggressive, and I made the comment, and I still believe this is true, is that what we're going to see here is this market just go really in a very choppy pattern that we've set up. My Monday's video was market to enter a choppy pattern. Went up for a day and a half, Tuesday into today, and now we're back into the range again. So what these models, all these buys are telling us that there's a lot of short-term stuff starting to emerge. We're only 20%, 26% bullish. So what I want to talk about, and when you're using WaveTech, that there's a number of things that this product can help you on, and I think this is important to understand as well, is that having a vision of looking at 16,469 items, folks have asked questions, how could you have 16,000 items? Well, those are mutual funds, ETFs, and individual stocks. There's probably 6,000 plus stock individual equity symbols in here, but those are inclusive of everything. And I've also told you we are working on a project to clean the database. There's a lot of old mutual funds and stuff in there nobody's going to use, so we're working on cleaning it, remapping out all the group sectors. All that stuff is actually happening. So yeah, so anyway, but this platform is going to help you in a lot of ways, and especially when you start to get some buy signals, and I'll try to tie all this stuff together. I'm going to go for maybe another 15 minutes or so, and I know I looked at some of the names on the Zoom meeting. Some of these folks are new. I would like to hear from you folks on questions that you have, so that we can help some of the newbies out there. But I want to cover this WaveTech. We did some pretty interesting things last week, and last Wednesday's live stream was epic. There was a really amazing trade that I walked you folks through on the NASDAQ futures last week. So hopefully we get lucky tomorrow. We'll be able to do something exciting like that. But today I definitely want to focus on, once I get through the WaveTech, the market grid, all this kind of stuff, I really want to actually focus in on questions and stuff. So I'm going to rely on you folks to run this meeting and keep it going today. And I really, we've done so many of these. I think this is number 16 or 17. Number 15, by the way, is non-existent because I deleted it. And the reason, I'll just tell you the reason why I deleted it. I left the thing on for about 4 hours, and there was a conversation I had that obviously was out on the internet. So fortunately, not a lot of people probably turned it on and wondered what it was and went away. But I kind of panicked, took it out. So that one's gone forever, unfortunately. But anyway, all these others are out there, and there's a lot of good content on there. We're still trying to figure out a way to pull some good content out of those videos, just to get things to so that you can find the segments where I'm talking about things that are significant and using the software. But this whole database thing is very big from the standpoint of being able to see the vision of the market. Now, those of you, I know there's a bunch of you both on Twitter, and I've seen a lot of common names on the YouTube. As you know, I've been talking about, if we went back, I don't know, 8 weeks ago, maybe 9 now, and when the markets, I guess the beginning, as we were coming into late August, early September, the database had went, in late August, it went up to 90% bullish. And I told you folks we're going to roll over. I thought we'd roll over to about 40%. Well, we completely blew up the database after the September swoon hit, and we saw the database go from 90% long to 8%. And that was one of the most brutal decimations of this database I think I've ever seen on a short-term basis. And it's one of the lower prints on the percent bullish I was saying. So we also knew that when that starts to happen, we're pretty close to a blowing out database, and we're going to start to get traction. I was actually really surprised. I was really surprised last night when we saw 7,200 buy signals come out of this thing and kick the percent up to 26, which is exactly the number I've been talking about. We'll see what kind of rotation we get today. I suspect there won't be a lot of negative rotation on the database just because we're still very low. And as I said, the 3-2 model is the primary model on the short term, which 61% of all the symbols are actually mapped out to the 3-2 model. But so this whole idea of WaveTech, the idea of being able to watch 16,000 symbols, being able to get a feel for it, I talk about it every night in the videos, but you guys also have the ability to go through there, and you can click on any of these links here, by the way, and this won't take a minute to come up, and you can see all 7,039. Actually, it's closer to, it's actually 7,100 plus buy and sell signals. I really need to fix that bell. It's an hour off. I guess it's good because when the clock switch, it'll be back on time. So it's, every afternoon that happens to me. Anyway, so believe it or not, this is still bringing us up because there's 7,000 symbols it's fetching right now. So once it comes up, I'll show you a couple things and being able to. Oh, nice. That's a nice error. See, complete your request. Sounds like a call for the IT guy, right? I always love it. You love the live blow up here. Let's see if there's a connection issue here. No, there it is. Must have been I think what happened was there's so many symbols it was fetching, it took too long and it timed out. I will definitely see what was going on with that. But anyway, here's all the dollar signs. This is the 3-2 model. These are all the dollar signs. We can sort this by market position, so we can click on a column. If we click on it twice, it shows us all the buys. What I suggest that you do is if you go to sectors and you go to about page, I think 4, not quite, 5, there we go. When you start to see the sector fill in, this is where you'll see the individual stocks. most of the non-sector signals that come out of the database are going to be mutual funds or something that's not in a sector formation. So you can start to see all of these trades that came out, and but you can sort through all these things, and this is going to give you a lot of input. So one of the things that I'm hoping to do is that this is the other thing that we're working on. I'm going to flash back to the market grid. What we're hoping is that the symbols that can be, I'm just highlighting here. Let me go down here a bit. Yeah, so let's just say like Amazon. What we're hoping to do is if you obviously will have the WaveTech available. If you're logged in, you'll be able to see, you'll be able to click on Amazon. It will take you right to WaveTech, right to the research mode on the software, and that'll be a nice link and interaction. So somebody's asking on YouTube, does the software update after market close or a different time frame? Yeah, it's at the moment it's random. The plan is that right now there's a man in the middle, meaning someone has to actually run a manual process to post it. That is what the next phase will be, that there would just be an automation where it just grabs, the CSV gets created, and then it just grabs it and posts it. And then ultimately this product will have its own database. And as soon as the data is updated, just like with the nightly runs on WaveTech and Portfolio Expert, you'll actually get the run. Once that new data comes in, it will automatically get ran. And so that's coming down the road. So it's not that far away. So, be patient. Just like I've told everybody, it took us a while to get the WaveTech platform going. It took us some other thing, a while to get some of these processes going as well. But anyway, so let's take a look here. I'm just gonna pull this thing out here. Bear with me 1 second, folks. All right, sorry about that. I had to reset something here. So let's take a look at what Amazon was doing today. I think we can actually. There's a couple ways to figure this out. I'll do it this way because this might be easier. We'll actually use the grid itself. I have it lined up. So if we go to these symbols are random, so I just got to find, here's Amazon. So this is over here is the daily grid, and let me show you on the screen. So this is what was on the Portfolio Expert website. So this is the range for today. High 3182, low 3090. R2, let's see here. RXT 3276. I'm sorry, 3113. So we went above R1. We traded between R1, R2 here on the high. On the downside, low 3090. We blew through. You can see on this chart, we just blew through everything. So it was a no man's land in here, and that'll happen a lot where you'll see it print between R1, R2. That also goes to analysis that I did on the S&P last night, that I thought we would move between the somewhere between the, you know, 32.15, 32.42 level. So this is so some of these stocks. Let's take a look at Apple here real quick to see how this played out. Apple had almost the same type of pattern. S2. We can see on Apple high R3 high, and then R3 was hit on a downside 114. So we went actually all the way through STX 113. On the upside 116. We didn't quite print an R1. So as it turned out, you know, all these patterns I've talked about, we're not going to go into a lot of market analysis, but a lot of these patterns that are setting up here look very similar, and they're, especially these mainstream stocks that are out there. So I'm just grabbing some random. Here's NVIDIA. Now NVIDIA printed up, looks like at RXT 565. Look at it, high 565.68. 565.35 was RXT, low 46, S1 41.94. So those ranges, you know, once again, if it really comes down, if you're going to trade this stuff intraday, is possibly you put maybe a 15-minute chart on here. I'm not sure what happens when I switch this over. Let's put it over. Yeah, so this thing's going to run. This market grid is actually on a 15-minute basis, so you can see how this thing's set up. It was interesting. Here's an RXT. This bar right here was an RXT sell signal, so we did get a drifting. It kind of went a little higher, but then drifted off, even on a 15-minute chart. And by the way, I do want to point out, those of you that are watching the channel, on the S&P yesterday, you may also remember right over here, this is another element with using the market grid that can be very helpful. I'm going to show you two things that have happened here, and we'll call it the power of the market grid. Right here, let me draw another arrow. That high there, we closed this day above the RXT number. That started that decline. We closed above it yesterday. I mentioned we got an RXT sell signal. Watch out for a reversal. Watch out for it between 34.15 and 42. We got the reversal at 34.0. This is not the right. Yeah, this is not the right value. I'm on the wrong ticker. But this is a setup, and when you see that stuff, this is why I was able to. This is why I was able to figure out that there was going to be 2 to 3 days of sideways move, and so that's how the grid can be helpful. And this happens on every one of these stocks. If you see the close, there's no rule for a close below that I've been able to see that's consistent. But anytime this thing closes, here's another one right here. Here was a close above the RXT above the line. We went sideways. It's usually a 2 to 3 day sideways move, but most likely it trades down toward the bottom end of the grid itself. That's exactly what happened today. We traded up, and we went right down to, we went right down to the extreme on the session yesterday. And you see now this grid that's up here right now, this is the grid for tomorrow. And I was talking about that before it updated just a little bit ago when we started this broadcast, is that we're probably going to see the grid turn down a little bit. And, you know, I'm just going to do some random, tie together some random patterns that are going to likely to happen here. But this is the kind of thought process that you can develop by having the tool there, by being able to see these things. And obviously this goes hand in hand with me actually doing my daily commentary. That's the important part. You have that backup. So let me just show you one last thing here. And once you see these RXTs, you've got the backup as far as the my daily commentary that I'm going through every day, and people thank me for my dedication and daily work. This is what I do for a living. Okay, this is supporting a lot of institutional accounts and all the new retail accounts we have. This is my job. So this is what I do. But I always say you shouldn't have to be thanked for what you're getting paid to do. But anyway, this was the little ABC, and I told you it was going to be a shortened version of this. And now what we're going to see, most likely, we'll see if we get confirmation, we should see some pattern like this. And there is, let's see, this is the cash. There is a gap down below that likely to be filled. And I talked about that as well, I think 2 videos ago. But this was set up by this RXT close yesterday. And when I saw that last night, I always show you folks that, I know you can't read this, and I know the folks on Zoom can't see it, but I do these worksheets every night. So matter of fact, you'll be able to see it. Maybe you see it, but this is my worksheet from last night. YouTubers, you can see this. I need to figure out how to get this onto Zoom, but I do this. This is from last night. This is what I did the video from, and there's some things that are important on there that triggered what I did as far as the analysis goes. And this is all breaking down, but it all comes from using market grid. So what you folks are learning about watching the channel and about the work that I do, it's very, very methodical from the standpoint. There's a process around every decision. Are they going to be right all the time? Of course not, right? But we're setting up probabilities, and that's my entire work has been based upon probabilities, understanding what the probabilities are day to day, week to week, month to month. And once you get that perspective, you can actually make some very good decisions in the marketplace. And I always remind somebody, and the reason why we've got the WaveTech tool out there, soon to be Portfolio Expert is going to be out. And the reason why these processes are really important from the standpoint of why those processes are really important is there's a thing called discipline. And if you look at, it was an old Webster's dictionary definition, and it says to discipline, to become submissive to a state of order or a set of rules to bring about a desired result. So if you don't have every step of everything mapped out, you go from being disciplined to discretionary, which is basically a form of guessing. And this is why, the whole AI world is based on this concept. Whether Tesla can drive itself, or any automation process is based on one basic premise. If you can improve the performance of a human by just a little bit, it has value. So there's there's 1.2 million people get killed on the road. More people die driving cars than died of COVID this year, by the way. But if you can change that number by 100,000, 200,000 by autonomous driving, then the AI works. And this is the same thing with a process like what we're doing, the black box, doing any kind of automation in trading, is it actually gets you, if I can be better than a human can be by a little bit, you're adding value. And in this case, it's so consistent over time, you add a lot of value. And people tend to look at a trade or two and go, that thing was wrong, it doesn't work. And I've been using this thing since 1998 in some form or another. And actually 1996 was the first iteration of the software. And so it's improved over the years, but the models themselves haven't changed at all. In fact, in 1992, the core models were built and nothing's changed. And that's why we have ER ratios and all those things on the platform to go from there. So it is about quarter after. So my plan is to open up some discussion on the Zoom channel. I just a lot of background today, a lot of things that hopefully you find interesting. I'll bring back the. I got to find where I hid the WaveTech tool right now. It's not on the screen. Bear with me. So we'll bring this back over. There we go. So you Zoomers, any questions out there that you would like to talk about, or concepts or things that you're struggling with, whatever. What do we got?
I have a question about TradeStation.
Yeah.
You're using it all the time, and when you do your morning reviews, or I guess you call them your evening reviews, but I see them in the morning.
Yeah. Well, it's actually morning to me too. Last night was almost 2 a.m. So.
Okay. I don't use TradeStation. I use ActiveTrader Pro, which is a fidelity thing to follow most of my investments through.
Right.
But does this system work or interface better? Since I'm not familiar with TradeStation, does it interface better with TradeStation? Is there an advantage to using TradeStation?
Only if you were to, really. The answer is yes and no. If you were going to use like the suite of indicators and things like that I'm putting out on TradeStation, then that is then the answer is yes. TradeStation is better as far as cost or fidelity. I actually have a fidelity account as well, so I don't think that there's yeah. I mean, you can put the trades in there, Jim, if that's your answer. You don't need to have it. If you're comfortable using WaveTech and getting the signals and putting those things in your manager, one of the things we're looking into is the ability for you to do batch orders, which I've mentioned this before, is on the institutional side, our institutional clients have some processes where they can trade multiple accounts and put in bulk orders and put in like one order on 6 different symbols and put it against 200, 300, 500 accounts. You don't have that ability, and we're actually looking at 2 different platforms right now to give you the ability. So let's say you just want to run a portfolio and we issued 3 or 4 or 5 signals. You can literally just click one button. It will figure out how much to buy and sell dollar wise, and then slam it into your dealer. But I would say it just depends on what you're trying to do. If you wanted to use the models on TradeStation, then TradeStation's it's a great tool. I've actually been with them since 1992. I was their very first solution provider. In fact, I coined the phrase solution provider back in '92 with Bill Cruz and his brother, who were the original founders. So yeah. But yeah, long answer, but I don't think it matters if all you're doing is, if you're just trying to use WaveTech, then you don't need to switch over to TradeStation.
Okay, there's no there's no active linkage right now at the moment, is what you're saying.
Correct. And and the plan is we're trying to get to a point where we build a new platform that will be broker agnostic, which it will, meaning that you could just hook up your Fidelity account to it, so you can get the trades right over to Fidelity without having to leave our platform in the future. That's the plan of what we're trying to build here, and that will give you seamless. We don't want to be tied to any one broker, and we're looking at TradingView and some other things for some of those accessibility as well. I've got another partner that we've worked with and just haven't figured out how to actually integrate just properly yet.
Okay, and I'm still on a very steep learning curve with the system. When I look at the graphs, quite often I cannot tell what the axis on the right, or the vertical axis on the graph, is, what the relationship is to that, to the value of whatever we're looking at?
Like, tell me, like on a research area?
Yes, in the research area.
Okay.
Just go to almost any you know, go to any account or any of your portfolios. Just go to a portfolio and bring something up.
Okay. Like on the equity
So,
curve right here?
right.
So where are we talking about as far as?
Okay, so what is that?
That's just my airlines Buffett strategy.
Okay. So that graph on the right, you know, it starts out at, what is that, about 1,100,000 or something like that?
This was
What is that
50,000.
on?
So 50,000 is down here. You can also see it down. You can see the total values down here. It doesn't show you the beginning value. And Jay, I'm going to reach out. Is there a place where we can see like the beginning value? I don't know if it's
On the mainly on the statistics page when you're looking at the portfolio list.
Yeah.
You do the stats, but
I'm just looking here. Like there's no number which shows beginning value or anything here. I guess the only
no,
place that I know that would be, Jim, is that if you went to the you know, brought up a
Well, is that the value of the equity now? Is that
Yeah.
what that's supposed to be?
yeah. So this is the beginning equity. This is where it's at right now.
yeah, I was just gonna say that's what. I'm sorry. Go ahead, Jim. I'm sorry.
Sometimes that doesn't apply. Okay, so it doesn't apply to the relative value of the stock. It's just the value. It's the value of the total equity that's invested.
Yeah. So okay. Yeah. That's actually
Okay.
now. But no, hang on. Now we're at the real question actually. So what this line represents is the value of all of the trading that's been done from the inception. So possibly we could look at maybe yearly returns. That's not going to work. I'm looking for some. I'm thinking there's yeah. So what it's showing you is the beginning equity at 50, and now it's at 100, but it's accumulated. This is the answer. It's accumulation of all these trades that made that equity grow to that level.
Okay.
So it's the equity curve of the portfolio, not the individual stock in or any of those holdings in there. So
I was trying to tie it to the value of the stock or the
Yeah.
value of something, you know, and I couldn't figure out.
yeah, no, that actually makes sense. What you're trying to do there, but it's really just the total value of the returns if you did everything you see on the screen. You bought and sold at these points. If you bought and sold at those points, then you end up looking like this.
Yeah, and the splits and things like that occur can really kind of confuse you.
Yeah, the splits are fine because everything's split adjusted. So we capture all the splits, all that stuff. And the only thing that you might see is if you ever look at an individual, if you see a spike or something down or up, maybe our algorithms miss the the split. So maybe there's a drop in the price or something.
Okay.
So anyway.
Thank you. That helps.
Yep. Okay, good.
That's been on my latest confusion.
Okay, that's all right. Well, we'll keep working through them. That's why we do these, by the way, Jim.
That's why I show up too.
There you go. I like it.
Hi, Bob. It's Wayne. How you going?
Hey, Wayne.
Hey, if you were adding to your portfolio, say you bought something on a 3-2 model, you know, back in say October last year, and everything's going good with that, and you want to add to your portfolio, and you notice that a buy signal sort of come up on the, like, say the daily 1.2, and you go, oh, okay, I can buy that, hoping and looking at the data, going, we'll probably it'll probably turn out to be a weekly one later on anyway. So
Right.
Everything looks good. Would you buy that when you like I had a buy signal last night, you know, after the model ran on Friday night.
Right.
to buy that. And I thought I'll buy that. Because worst case, if it doesn't work out on the 1.2, I can just trade it.
Right.
Would you do sort of things like that?
Well, you can, but here's the thing. If you're trying to build an equity curve and you want this strategy to reflect your actions that you're doing, it gets the limitations is that WaveTech, you can't put a specific, like, you can't say, well, let's say it said to buy it. It always is going to buy the open, and then when it issues a sell signal, it's going to sell the next open. You can actually, I've showed you before, where you can actually cause that sell signal to occur, meaning that you can turn it. So you could buy it today, 2 days from now, you turn it off, it will sell the next open, right? So, but it's going to be the next open. So it's buy at the open, let's say 2 days ago, tomorrow it's going to sell at the open, and that's going to be the profit and loss that gets reflected. You don't have to do, that's the only way the system can track those ideas. What we've told folks in the institutional side is you do if you decide to get in, buy it where we buy it, and then when you decide to sell it on that next day, and then your equity curve will match with everything you do. Otherwise, when you look at your equity curve, that should reflect what you're doing with your brokerage account. Does that make sense?
Oh, yeah.
So what you would
maybe
do
when I'm doing stuff like that. Sorry.
Yeah, what I was going to say, what you would do would, whenever you decide, okay, you get to buy signal, you're going to go ahead and do it. You leave it in. If you decide to exit it, then you just go in, and if you recall how to do those start stops, you would just stop it.
Familiar with them start stops now. I use that quite a bit. Yeah. Okay. All right.
Okay.
Cool. One other question. This is more of a trading question. What do you think sometimes in pre-market trading? What's your view on that sometimes?
What? Explain that.
Like buying, like pre-market.
Oh, pre-market. Oh, okay. I thought you said free market. I thought they were free.
No, not free.
I was getting a little confused. Must be that it's a long wire between us here.
Absolutely. Yeah.
But anyway, yeah. No, that's fine. I mean, and the thing is, the only reason why, I'm trying to answer this right. So what you create by buying something different than what the model is able to show is you will create positive and negative slippage. So if you want to match the models and you want to look at this screen right now, we actually have discussed this in the back room, so to speak, a lot, and how to take the trades that you actually did and ultimately get them into the system. Right now, this is a modeling system, not a tracking, right? So the way I'm telling you is the way to track it. But if you went pre-market, you might get it better. You might end up getting it worse, right? And one of the things that we've preached for 20 years is that what you want to do when you're running a modeling process is you want to be as consistent at everything you do. You want everything that happens within the process itself to be recreatable. Otherwise, the data points are the same. If we tell you to buy the open and sell the next open, whatever that is, try to match those points, those data points, the best you can. And what happens then, the equity curve on the charts will match what you're doing. Otherwise, you're going to have a mismatch. And Jay could tell you, we get advisory firms that just freak out when the values change a little bit and they can't figure out why their values are different than what we have, right? And what their returns are different. And Jay, you want to speak to that at all?
Other than I heavily agree with you.
Well, we had an old why don't you tell them about our old client?
Oh gosh, I don't want to name names.
No, you won't.
They were awesome. I love that office though, but it was fun to work with them. But I just had to become an assistant to too many different clients because they didn't understand why the numbers weren't matching, and they acted like it was this major deal, and it was something very dramatic and drastic. So here I'm like, okay, give me your books and let me look at the portfolios. And it was like not brain surgery or rocket science. You're just looking at going, well, gee, you didn't do the trade or you did half the trade. A lot of it they were doing half. It said the system said buy or sell 200 shares. They're doing 100. Well, gee, you expect the numbers to match after that? Or sometimes they wouldn't do the trades at all.
Right.
Or a classic thing, which I was laughing one day, was that they, on their books, they had certain symbols that they weren't even putting into the portfolio. So like that one right there, that just blew everything out of the water. So I was like,
Yeah.
oh, there you go. Here's your sign.
Yeah. So Wayne, the whole thing is matching, making sure you're doing what's on the screen. And this thing could be really useful in tracking your assets and building these portfolios. And, we're trying to get you guys kind of basically build your own ETFs, your own dynamic mutual funds that are, that you own. So if you want to get to that level, you have to match them. And that's what, that we have a couple standout clients like that, don't we, Jay? But you've got to do everything. And if you don't, even if, let's say for instance, right now in WaveTech, you can't do it. There is a way to do it in Portfolio Expert where you can actually force it to buy and sell things, and you can force it what percentages to own and all that stuff. And, even with that extra tool, we've seen a lot of mismatches as well.
One other last question. When you show the PPMs on WaveTech, PPM 1, PPM 2, PPM 3, on PPM 2, it doesn't show you the 40, I think it's 40-day moving average.
Yeah, I think there's on here, that's been there for longer than my one of my children, not Jay, but another one. They've been there for like 20 years. So like what you're talking about here, I'm just grabbing a random symbol, and this one only has one line, PPM 2. Should have two. I'm not sure.
I was thinking, is there something?
Yeah, that I have to tell you, this is honest, is that the investment advisors and people in the past, Jay could confirm this, that they haven't been as detailed as you folks. And I love how deep you guys get into the product and stuff. And that's why we're just trying to get everything cleaned up. And the goal is clean up and then rebuild and put a new really cool platform together. And we've got, we're actually talking to a couple of UI people right now on, really putting a really nice user interface together. The engine itself is fine. It's just data driven, and the cosmetics and all the GUI that makes it run.
Bob, would you mind going back to those graphs on that last screen?
Sure.
Okay, here again, I'm confused about the graphs. Now, this top graph, what is the function of the right hand of the right hand axis?
This is, that should be the price.
That is the price of the stock? Okay.
Yeah. So this happens to be one of our indicators. So if we put Tesla up here.
Okay.
Hang on. So you're going to have the price of the stock.
Okay.
So on individual stocks, that's what it is. Those indexes, though, if you click on this consumer cyclical index or auto truck manufacturing, these are our internal indexes that we built. And actually, that's interesting. The Tesla trade at $65 looks pretty good yet. This was a weekly trade that came on last October 28th, a year ago.
Oh, I would have never dreamt this of Tesla.
No one would have. I guess you never underestimate Elon Musk. Yeah, he's obviously genius, and he's genius in like 3 different fields, which is unheard of. Yeah, Yeah, I hear you. Somebody says put lipstick on it. I think they're talking. Yeah, that's what it needs. It needs. We actually did put lipstick on it, but it's still a pig. So we're working on changing it. But yeah, so this, but this also the current trend phase. I'm actually working on getting this. It says this is a phase 3 PW, which 3 PW stands for there's a position, and what it's saying is that it says suggests a spike reversal top could occur at any time. Extreme cases, stocks in this condition can continue for a while, but new position at these phases are highly discouraged. So we're telling you we wouldn't buy Tesla at 425, which is really what 1700.
No joke.
That's all it's saying. But we're glad we own it at $65. But
yes, I can appreciate. I wish I'd have been in there.
yeah, all of us do, So, but yeah, so that, but this is modeling, and you can switch. Yeah, anyway, so all these over here is that.
Thanks, Bob.
You're welcome. More questions, folks? Yeah, I'm leaving this meeting up to you guys. Run out of questions. Let's see.
Hi, Bob. I have a question.
Good. Who's this?
Christina.
Hey, Christina.
So I've been trying to, and I think this is, I know you've kind of touched on this, but I don't know if my methodology is right. I've been kind of trying to transition out of where I was to matching up to WaveTech.
Okay.
And some of my approach has been when WaveTech is out of things that I'm still in.
Yeah.
It's hard to know when to exit. I've kind of been looking more, I set it mostly at weekly because that seems to be what you recommend. And then I've been looking at the dailies maybe for hints on how to exit. Or I don't know if it feels a little scary just to go and sell off everything
Yeah, it does. It should be. Yeah. So I'm going to tell you to reach out to us. You can use this feedback button or something, and we'll probably should do a review and actually talk to you. Anytime somebody's throwing some real money around, we can spend a few minutes and at least find out a little bit more about what it is you're trying to do, because that is an element we have not talked about, which I think maybe that's a really good show to focus on, actually, is how to transition from where you are to this. And especially if you brought it up and everything that you own, we don't.
Right, yeah.
Yeah, so one of the quick fixes, a Band-Aid on this situation, I would say, is to take and at least run the daily models to see how they're looking. Of course, the daily models have been out of everything too. So what you could do is this, is depending on how I don't know what they are, what these items and how they're acting, but I would look at taking the daily models, maybe you get a new buy, and then stay with the new buy on a short term until it gets out, maybe roll over, but check with the weekly, make sure. Sometimes what'll happen, we actually run on our other platform what we call a multivariant approach, which means we'll run the daily, weekly, monthly, and we'll trade the same stock 3 different ways. So we may have no trades on, then the daily comes in, and then the weekly comes in. So we actually stack the position as these different elements come in, and ultimately we even have the ability to do secular trades. So then it stacks to a long-term trade, and then you might see daily jump off, and then the weekly, and you only have the long-term. So there's like a rotation that happens based on these different trend levels, and that's a really good way to do it. But you can authenticate that in a way. It's a little more manual. How many symbols are in your portfolio?
Well, less than there used to be, fortunately. I started with 50.
That's okay. 50's all right.
So I think I'm down to probably 30.
Okay. That's a good number. Yeah, so, there's a new world that we live in now, and of course with fractional shares you can do more, but you got to be careful also of spreading yourself out, too thin. So the one thing, if you don't have fractional shares, the one good thing about these splits with, Tesla and Apple and some of those that have split, at least gives you ability maybe to position some of these things. We've always, most of you know, watch the channel, know I'm not a Warren Buffett fan. And so anything that Warren Buffett touches, I'd rather go the other way most of the time. But so like Berkshire and things like that, those are hard. Those have always been hard things to put inside a portfolio. And working with the institutional community that we've been with, they like to hold those things. But I think 30 is probably a good number. Somewhere between 20 and 30 is all you need to authenticate a really, really good strategy. And then there's two things that you probably need to consider is the selection process, how you're coming up with the stocks and mapping those out, maybe with, looking at ERs. And how long you been with us?
A little over a month.
Okay. Yeah. So, stay patient and go through some of these elements. And if you haven't heard some of this stuff, but I would go through and look at all those symbols and see what kind of ERs and, whether daily or, daily's been the big winner this year because of the volatility levels. Normally it's the last place you want to go. Not the last, but it's very finicky about how those models actually operate, especially when we get into lower volatility ranges. There's just a lot of noise in the dailies and there's not a lot of activity. Well, this year dailies have been king. I mean, they've been really good. And Jay has actually a lot more experience with dealing with some of these more aggressive models and building strategies as well. He's done a lot with that. But I would say, go through all the constituents you have, ask all the hard questions. One of the things, we have some old videos of me. I was a lot younger then. I looked really good. I'd like to go back there anyway. But there's some old videos that we have not released, because they were based for advisors. But if you're going to run a portfolio and you're going to manage your own money, you want to have some of these things that I talk about there. And one of the things that I suggest to everybody, if you're using this product, is to actually write out what the goal of what you're trying to do is. What if you're going to build a specific style box or strategy? It could be, I want a growth strategy or whatever. Try to put it into a box and then start finding constituents that fits in that box. And once you get to that level, then you have several levels of scrutiny to go through, and ultimately you end up with this machine. I said something about discipline a little while ago, and the whole discipline process, it's not just about following the buy and sell signals. You have to have, I said, I want you to have a process that's recreatable. And by recreatable, I mean, how do you find your stocks? We're working on, hey Jay, did you get a hold of Mitch on that update for the screens?
And this is no lie, I'm not trying to cover my own butt.
Yeah, sure.
Yeah, just actually as the show was starting, he got back to me and said he's going to work on it as soon as he can, because I just turned in the spreadsheet about an hour before the show. Well, yeah, about 30 minutes, 40 minutes before the show started.
Keywords as soon as I can.
Right. But I'm gonna try to be on him about that.
Okay. Yeah. So we have another associate that we consult with. But anyway, so we're going to put these screens out, and we're working on getting this back to a machine level like it used to be. But what you can do is you want to find maybe fundamental screening. I don't care what the criteria is, Christina. I just want you to be able to recreate every thought, why a stock gets into your list, how it comes out, all of those things, step by step. And I've got a couple of really good videos, like I said, that I did many years ago. I think 2008. What is that? 12 years ago. Yeah. So a young man in my 50s at the time. So the concept is recreate everything. Selection process. Why symbols come off the list and how they get in the list. The review process. Do you want something with a certain ER? You want to make sure they have certain accuracy in our system to make sure you have a higher level of confidence, so when you see a trade that you'll follow the trade, right? And then the final phase is literally just reviewing and seeing how that constituent list and how everything's playing out. and all of that sounds like a lot of work, but the constituent, once you figure out what it is, the constituent list, we suggest maybe a quarterly, even a 6-month review. And then the other things you do monthly is you just ask simple questions. How is it performing relative to the markets? How much cash does it have? Is there risk? Just some basic questions. And one of the things that I've been working on is actual worksheet questionnaire. And what we've always wanted to have was something right in the software that we could ask questions and you could go back and review it, which would be really cool to have. That was an idea. That's about a 15-year-old idea that still isn't implemented, but that's part of the new platform. So sorry, you have to be careful when you ask me a question. It could be a long answer.
No, actually, those videos sound amazing. They sound
yeah,
like
maybe
they'd
I'll
be
put
very
them
helpful.
out. I put them out. We looked at them and said, gee, they're really advisor based. And everything I'm talking about fees and charging clients and all that kind of stuff. There's nothing bad about it. It's what the industry does, but those are things that we talk a lot about in those videos. So yeah, those are pretty simple. They might be on our Vimeo account. I'm not sure where they're at right now. They might be over there, I think. But anyway, yeah.
Just one follow-up question. Is it better to be in the dailies right now, you think?
I think dailies are going to get tough. I made this dailies. If this was last March, absolutely, right? And actually through the summer, it's been pretty good. It's hard to tell what kind of volatility levels we're going to get. You know, who knows? We got this election a few weeks away. What kind of volatility kick up? So for at the moment, the way the patterns, I'm watching a database. So I'd say keep on top of the daily videos. I watch those things. I look at this stuff pretty deeply. And that is going to, you know, that's going to, I'll be scrutinizing that stuff and looking for any kind of issues there. At the moment, I still think you can use the short-term models, but I would definitely start leaning toward the intermediates, the weeklies, and try to find good values in some of the entries. There's a lot of them. 60% of the symbols are already long in that database, but a lot of the stuff is mutual funds and stuff like that. So, but if they are, yeah, that's probably your questions have triggered me into a couple things that we need to cover. And you know, there's two ways to look at it. Like you mentioned, your original question was that, you know, what do I do if we don't own anything? Do I just, it doesn't feel very comfortable selling everything. And I agree. There's another thing is, you know, that we own stuff that you find, and how do I get in now that you already own it and maybe it's up? You know, there's some scrutiny that needs to be there too, because you don't want to buy symbols that have already appreciated 20, 30, whatever %. And those can be dangerous too, because you end up buying risk. You're not really buying the models. So you don't have to get in exactly when the models go, but there's some things. I know I talked about that on one of the shows, and it's embedded in like a 2.5 hour video that you'll never find. Okay. Without watching, you know, 50 hours of this stuff and skimming through it.
I do remember that one. I think you said something about like 30%.
Yeah, there's a
rule or 50% rule.
Yeah, 30-30 rule, which is 30% of the time, but that or below. And it's interesting, on that sheet that we do on our screens, we actually show you on the screens if that symbol has a open position and where it lies in that holding period, in that 30-50 range, and we tell you all that right in that screen. So that's helpful, so you don't have to try to go in and look at it. We've already done that research up front, and the screens will be once a month. So obviously you could, you know, you want to re-verify if you're really close to the screen release, then it's okay.
I was going to cover a question if
yeah, go ahead, please do.
Yeah, this is for the Zoom chat. One of the questions, and I wanted to get to this because you're already on the screen that I need, so this is perfect. I didn't want you to change the screen. Not that we couldn't get back to it, but one of the question, or a couple of questions were coming up, was the trade system drop down menu, and I was trying to explain that a little bit in chat, but it's obviously a little easier to explain verbally in this format. Yeah, if you go over to the left a little bit to research, I was starting to tell them that when you first look up a symbol, the weekly search bubble will be, that's the default setting is the weekly. So if you want to stay with weekly, you can. If not, if you want to do daily searches, you click there. But when you finally get to a symbol that you're looking at, that drop down will allow you to change. You don't have to keep going back to the research box to click weekly or daily. You can just go to that drop down and you can change the trade model that you want to see if you're just trying to research and see how each model did on a particular symbol.
Yeah, and you won't have that's the raw output. So I just brought up Tesla daily. So it's daily 3.2. We were just on Tesla. I think it was weekly 3.2 was the right number too. So this is the best Tesla model. So it's been in and out, in and out. So it bought down here, sold in here, and then it gave up on that. But now it's just kind of flat from where it is. No position on that. But we could go right as Jay was talking about. We can go down and drop it to. Let's see if I remember right. Yeah. So 3.2 weekly is the optimized model. But we could look at 1.2 weekly. So if we just want to see that, and this actually goes to, you can see, look at this, 1.2 got out, didn't get back in to here, it's got a good rating, and you actually made money, but not as much as if you would have just went with the optimized model. And the way I'm going to find that is here, is like Jay was saying, if I go to research and it's set on weekly and I go into Tesla, it's going to bring up the symbol, and when I click on it, it will show that 3.2 model. There it is.
Yeah, so to reiterate, it'll bring up the optimized system at first, and then you can change it later. But yeah, anytime you enter that symbol, whether it's weekly or daily, it will give you that optimized trade system first.
Yeah, and the other thing that happens, folks, is sometimes you might notice that the difference between 1.2 is nominal. Really, they're almost the same. One's just a little bit better, and sometimes it's a little bit better because this is always based on an entry and an exit trade. So you might have an open position. As soon as that open position closes and we re-optimize, and we only optimize the database on June 30th or whatever the last day of June, and December 31st, there's the software automatic goes in, looks for the best total net profit and remaps it out. The map hasn't really, it's been pretty stable. With this year being as volatile as it is, I would suspect some movement on the optimization tables when we come into year end, especially on the intermediate stuff.
Bob, there's another thing. When you enter a symbol in there, if you've got it on weekly searches, right?
Yeah.
If it's got a buy signal and the buy signal happens to be in a daily search, it won't show up as a buy. So you've got to actually, if you're looking for a symbol, sometimes it pays to search both. Yeah.
Yeah, exactly. So you have to make sure if you want to see the intermediates, you go there, and then that's exactly right. You have to actually click on the two searches, and
I'll bring that up because I've been caught out on that one.
Yeah, and it's actually not. I think the only thing that we have, I'm actually bringing up PX on the other screen here. The thing that we have on that is, I think there's a setting that it'll just look for best model period. Doesn't, if I recall. So that's helpful. Can say I don't care if it's weekly, daily, monthly. Give me the best. Let me see that, and then you can optimize by symbol as well, I believe. So, but yeah, so that's the only thing we changed. So it's a little clunky from that standpoint. You have to go back and forth between the two different time increments, and right now, like in portfolios, in Portfolio Expert, you can actually put the same symbol in multiple times. So you can You can optimize it for daily, you optimize it for weekly and monthly. And if you put it inside a portfolio, we'll allocate it out so it doesn't spend more than 100% of your money. And it's full on. We'll do an Australian reference AC/DC mode. It's rock and roll. So it definitely moves around a lot.
Hey Bob, this is Steven. How are you today?
Good, man. How you doing?
I'm well, thanks. Hey, I have a question to go along with Christina's earlier. When I just picked up a pretty conservative client, and I know I'm going to use ETFs primarily with her, and I know the system says to use the high activity, low liquidity.
Yeah.
And I'm wondering if, because she is pretty conservative, like real conservative, should I still use that, or should I set it on the low activity?
No, go with the higher one, because it's going. So it's a good question, especially from an advisor viewpoint, Stephen. What happens is the models, if the markets become quite risky, it's going to move that client to cash. Okay, so it's okay to be set. You just want to make sure when the markets are moving higher that you're participating the best you can. So that we're switching from a retail mindset to advisory mindset and that conservative client. And in fact, there's some sheets out there that we have that demonstrate, like, let's say you put around 5 ETFs in there. Most of those ETF strategies end up to be, over time, like if you did a 5 to 10 year look back, they're going to be invested about 60% of the time. They're 60-40. The difference is the 40 is cash. And the 40 cash is a lot of times can be better from the standpoint of trying to buy bonds, just buy and holding 60-40 bonds. Because what will happen on that side is the 40% is actually just has no risk at all. People don't realize bonds and stocks actually go down at the same time. Sometimes, right? There's no non-correlated. I don't know where that came from, I guess. But the point is that, yeah, so it would, that client, and any client, I call it a tube stock from an advisory standpoint, especially using a small set of ETF in a strategy, is you're going to be basically 40% of the time you're going to end up having cash, 40% cash on balance. So as you go over time, you just follow the methodologies. The key there, Stephen, is making sure that that strategy actually goes. And if you are on the portfolio expert side, you're on Zoom, so I'll show you. The strategy you really want is the WaveTech strategy here is for clients that even clients like you're talking about. Let me just do year to date, and
is this the one where you use the 5 ETFs, the global exposure?
Yeah, so this one's up 20, almost 26% this year, and the worst case it was down. I think at this peak right here was down 3, maybe it looks like it was down maybe 5.5% right here. This flat was 3. It dipped down, and then this thing doesn't trade a lot, but this is a global equity strategy, and this uses the multivariate strategy I was talking about. So it actually got in here off of a daily model. You can see it was right about in this little peak here. If you can see where my cursor is, it was right there is where this started to go on. Market dipped down, see equity curve dip down, and then it's been basically uphill. It was interesting that this little spike in June was the peak of the value. But that, but this is a much more stable from the standpoint of not having a lot of trades. But the other types of stuff, the short term, I would say on a conservative client on that level, that's exactly, it's okay to keep that setting. I know that's a long answer, but I want to be able to You're down
Yeah,
at
that's good.
Scottsdale, right?
That's good, thank you. So it's almost like the system isn't necessarily looking at risk overall, it's looking at risk of the individual investment it's
Correct.
looking at.
That's actually right. And that's really what you want to look at. It's not, it goes outside of the, MPT box and modern portfolio theory, allocation theory. They're looking at risk overall, saying, hey, if you match up this, and I've showed this before, and you may have seen it, Stephen, where I showed, a 60-40 strategy, on what it looks like. Matter of fact, it's pretty simple to show that. So like 60-40, this is 60-40 benchmark with no fees. I think if I do this, let me go to year to date. Go 3 year. Yeah, so the SPX is on top. The green line is with fees, with a 1% fee coming out of 60-40. So you can, as you go further down the road on that strategy, this is static, once a year rebalancing. Okay, and you can do that on this platform. But look, as you go out, how many years am I out here? This is 5 years. All of a sudden, the difference is 30% by just taking, from where the S&P is and dealing with all the volatility. So if you were doing the ostrich trade, stuck your head in the sand, you'd be up 70% from 2015, and only up 40% and charging a client 60-40. So so
Okay, thank you.
Yeah. So we're getting to be 6 o'clock Eastern time, and so let's do a couple more. And we've got the big live stream tomorrow, so we can do markets, have all kinds of fun tomorrow. Hopefully we get lots of volatility. Volatility is your friend, especially when you have a process. Yeah, Christoph, you think that's bad? I bought was trying to buy through what was the exchange that went bankrupt? I don't know if Mason's on here, but I was going to buy Bitcoin when it was, I don't know, $1.20. So anyway.
Hey Bob, this is Craig. I have a question for you.
Yeah, go ahead, Craig.
First off, thanks for the great analysis you provide every day. Really valuable. Appreciate it.
Thank you. Appreciate it.
So going back to WaveTech, if you had Tesla pulled up there a second ago as an example.
Yep.
And looking at the support levels, and I apologize, I had to join today, so maybe you already covered this, but with respect to the support shown for an individual stock,
yeah,
WaveTech,
yeah,
versus the grid that you're posting, it looks to me, maybe you can confirm this, that the support here are actually just the simple, daily or weekly moving averages.
They are. That's what they are.
Okay.
Yep. Yeah. So go ahead and finish your question.
No, I was just going to say, and maybe that you've been speaking to this already about integrating the market grid into this view here potentially.
Yeah, and especially if like we're looking at a week. Let me click on Tesla here. Let me put that up. But yeah, especially if you have the grid available right now, like you're looking at support 381, which is 10-week moving average. And so remember that the PPMs down below are tied to those averages. So PPM 1 is 10 week, PPM 2 is the 21, and PPM 3 is the 40. And I've introduced, there's actually another PPM laying out there in the weeds. I don't show you folks. This particular model 3.2 actually uses PPM 4 as a key element within the decision process. When we originally developed this platform, we were tied on real estate, and I believe when we started, the normal resolution on a computer was 8x6 at the time. So we actually had very minimal real estate to actually be able to display. And back in those days, people didn't think like their phones. So if you had to scroll down, people would never see stuff if it wasn't on the main page. So this is why it ended up like looking like it does. But what you can do with this, if we go in, let me just see if I can pull this out. Yeah. So let's say you have the grid available here. Let's get down to Tesla. So let's, I don't think we covered this, but it's something I wanted to cover. So it'll be a good question. I'll be glad we can search symbols. That's not far away. We actually have a prototype already running. And I think I could do like an, what is it, F3 or something? Yeah, Control F, that's it. Yeah, so anyway, we're almost there now. I've went through this much pain. Let's just keep going here. Okay, here's Tesla. So let's say this, if we look at, probably when you're looking at a weekly chart, if you're looking for an entry point, you could use this. Our trend phase are telling you not to do anything, but you can start to see what the expected weekly range is this week on Tesla. I don't know if we still have this here. I'm going to slide this over on the page for a second. I just want to see if there's anything comes up. Yeah, so we used to have a snapshot here, and we don't anymore. Used to be able to at least get a quote right here so you could see the daily quote. I'll have to talk to Michael and see if that can be reintegrated, because we had the service that we used blew up and we had to use somebody else. But yeah, but that is something that you can look at as well. And just so you know, I'm going to go back to that quote. You click on the Q button here. This is something that's really kind of clunky, but what you can see is if you want to view the data, you can actually bring up the entire historical value of the data right here. It is all right there if you want to see it. So you can go through this. This one goes back to what, 2010. So that stuff's here. You can actually go in and graph data. It's not a very nice graph, but so I said you could. But yeah, so
now, is that on the WaveTech buys and sells, or just a regular?
Yeah, and anytime you're in research or you see this TQWR stuff here, that's I know what happened here. I've got this screen way blowing up, so yeah. But yeah, so you can always go to this Q button if you want to see that, and that gives you this quote box. It just gives you access to see the data if you want to see it. Like I said, we used to have a bunch of fundamental data, a bunch of stuff that was in here, and it's kind of yeah, just not there any longer.
I appreciate the clarification there. I guess, and maybe as a follow-up to that too, I get a little bit of, well, I guess I'll just call it cognitive dissonance on which kind of system to follow, because there's kind of what, the WaveTech model, and I know you said that's kind of your DNA and you program that into the models. But then, I'm also looking at your daily analysis and
yeah,
the different kind of, say, Wednesday live stream tips on
say,
Tesla, for instance,
Yeah.
So what should be the philosophy there? Balancing the two. I guess that's kind of what I struggle with.
Yeah, that's actually really valid, because I'm in. I think Charles Cottle was on here. I saw him on earlier. He renamed. I said Mad Scientist Mode, MSM, which is Mad Scientist Mode. That's what I do on the live stream. So a lot of that stuff's just kind of on the fly, and I address the stuff from from the best I can. But when it really comes down to this, Craig, is what you're trying to do. If you're trying to use this thing as a place to get ideas to trade, that's one thing. If you're actually trying to run a portfolio or build this, what we call personal fund or something of that sort, then that's something that you those are part of the decisions, I guess, to try to separate those things. So it just depends on what you're trying to do. My suggestion is to everybody is to have a small portfolio that is being run, really methodically, doing it as we suggest, because you'll find that it becomes a very consistent player if you're doing all the things I talked earlier when Christina was asking some questions. That actually gives us that gives the ability to build that consistency. And it goes back to my AI comments, is that's all our goal is, just to be able to do better than a human can and be consistent in decisions without the emotions, right? So those are the things that always hijack anything, any good ideas. It's the difference between quantitative and discretionary. And discretionary trading, looking at charts, going, yeah, I like this one, and making those type of whatever process that you go through to finally go, yeah, I'm putting that order in. That's a discretionary process, which is the hardest way to trade, period, on a consistent level. So, I've seen it all because I've spent a lot of times on trading floors, and, one of the most masterful traders I ever worked with was, it looked random. I'm thinking, how does this guy make money? And he was an old partner of mine as well. But it's just, when I first saw what he was doing, I thought, man, this guy's crazy. And he was just throwing orders out. It looked like all random orders. I mean, I've seen him never stop talking during the day with people running on the floor, just executing his orders. Well, there was methodology to everything he was doing. I found once I got to know him, he was like the orchestra leader. It was amazing. It was the largest trader on the exchange, but it just looked random to me. But that, you got to have the process and try to lock it down to what your goals are. And it's okay to have a couple pools of cash, I think. Say, hey, I'm going to do this with this, segregate it out, and even open depending on your brokerage account, actually open an account. And this would be, if you are trying to do multiple types of strategies like that, to maybe open another account under a name like a DBA, where it has another name still underneath your household, where you have an extra account where you just do certain things, so you can segregate that out, is also a really good way to handle that.
Thanks, appreciate the advice.
Yep. All right, last one. Who's got it? Last call. Wow, nobody wants it. Okay.
Bueller?
Yeah, Bueller.
Hello?
Yeah.
Anyone out there?
Yeah, but I'm gonna go.
Okay, there you go, Jim. I knew I had somebody out there.
Have a good night.
All right, thanks. All right, folks, looks like we're going to get some folks signing off. But hey, listen, thanks for coming as always. Don't forget the live stream tomorrow, all about the markets, real-time analysis. Maybe we'll get lucky and get another trade. Christina, I see you're still on there. Would you please reach out to us? Even info at Kendall Report, or you can hit that that feedback button here as well.
Oh yeah, I already reached out today. Thanks.
Okay, awesome. All right, folks.
Bob,
Yeah.
What you're going to review with her, I wish you'd think about putting some of that into a future show.
Yeah, no, I will. And that's why she brought up some really good points today. I've actually made some notes about doing that in a future show. Absolutely. And, that's why I'm glad I just kind of rambled on for a bit today and stopped and I really, at the phase we're at now, we have some new users, but the phase I'm at right now, I would like to, I need to hear from you folks what I need to talk about. Because, I don't want to waste any of our time. I want to make sure we're getting all the right things done. So, all that. So, hey, you YouTubers, thanks for joining. I see some of you guys, you should join us on the chat. I see some of you I know are WaveTech customers. Don't be bashful. Come over and join us. And we'll go in there and work with you on all this stuff.
Thanks, Dan, Bob. Appreciate it.
Welcome.